Aloha YouTube, thank you so much for checking out this video. If you are new to my channel, my name is Mark, Mr. Dividend Investor. In this video, we are going to talk about a healthcare stock that has been quietly outperforming the market, growing its profits, and rewarding its shareholders. Yet, it still flies under the radar for most dividend investors. So that stock is Cigna Group. The ticker symbol is CI. In today's video, we are going to break down Cigna Group, which would probably be one of the most underrated dividend growth stock in today's health sector. We'll look at its dividend history, financial performance, valuation, and what the future might hold for the investors. But before we do that, make sure you like and subscribe, hit that notification bell so you don't miss out on any of the videos that I put out. As always, please remember all of this is not financial advice, it's just me sharing. With that out of the way, let's take a look at this company. So the company that we're gonna continue looking at is Cigna Health Group. Ticker symbol is CI. Is a global health service company based on Connecticut. It provides medical, dental, and pharmacy coverage for over 190 million customers worldwide. Now, Cigna Healthcare offers healthcare insurance for individuals, employers, and government programs. What also is great about Cigna Group is they acquired Evernorth Healthcare Services, and this company delivers pharmacy benefits, care solutions, and data-driven healthcare management. Now, Cigna isn't just selling insurance. It's running an ecosystem around healthcare delivery, digital care, and pharmacy management. Now, if we take a look at the performance of Cigna Group, if you look at it in the revenue in 2024 was $247 billion, a 25% increase from 2023. Now, in 2023 was about $195 billion, an 8% increase from 2022. And then from 2022, you can see $180 billion, a 3% increase. So you can see every year it has been increasing the past couple of years. Now, if you look at the performance for the past 5 years, if you were to have invested in this company 5 years ago, you would have been up 70%. Now, looking at alpha spread, now I wanted to see the performance based on the S&P 500. Now, this is a 20-year average, 20-year comparison. As you can see, S&P 500, the Cigna Group has outperformed it for the past 20 years. Now, if we go a little bit more, you can see the past 12 months, it has underperformed. So it has struggled this year. But if you look at the last 15 years, it still outperforms the S&P 500. Now, based on the performance, you can see again, 2025 has been 9% versus the S&P 11%. Now, if you look at the competitors' performance, again, 20 years one has been outperforming the rest of these peers, right? Now, if we go to bar chart, based on their price target, you can see a high of 428, a low of 300. And based on their analysis, they rated it a strong buy the past 3 months, and currently it's a strong buy based on 23 analysis. You can see about 16 strong buy, 2 moderate buy, and then 5 holds. Now, if we move over to stock Rover, based on their analysis, they rated it as a buy. You can see 23 analysis too. And then they have a strong buy of 16 for the past couple of months. You can see the price target in the high of 428, the low of 300, and then you got your other numbers in there. Now, if we move over to Simply Wall Street, based on their stock overview, you can see it pays a reliable dividend. Earnings grew by 35%, and then you can see a forecast to grow at 10%. Debt is now covered in the cash flow. Now, if we go over the stock analysis, looking at the dividend, you can see that dividend yield is 2%, annual dividend of $6, and the payout ratio is 32. It's been growing for the past 4 years. You can see a buyback yield of 5%. dividend growth of 9%, and it pays quarterly. Your ex-dividend date is September 4, 2025. You can see the dividend growth here. As you can see, the dividend history, they've been paying since 2021. So even more impressive, their payout ratio, the percentage of earnings paid as a dividend, is under 25. That means there's plenty of room for future increase. So pretty solid company in my opinion. Now if you look at Yahoo Finance, you can see there was an article, one of the best dividend growths, burning dividend for 4 consecutive years. The company's 5-year average payout comes in at nearly 19%. Currently payout dividend of $1 per share, and its dividend yield as of January. So you can see here some of the information about that. Ranks 9 on our best list dividend stocks for 2025. So if you get a chance to take a look at that, take a look at this article, read a little bit about it. It's called the 12 best dividends stocks. So it's Cigna Group, the best dividend safety stock, written by this person in January 14, 2025. Now if we look at valuations based on Yahoo Finance, you can see right here trailing PE 16, forward PE 9. You can see price to book 1.9. You can see a little bit more of the financial highlights, profit margin. You can see the income statement, the revenue, EBITDA, and then the balance sheet, $5 billion. You can see cash flow, operation, and all that stuff. So I think it's a solid company. Definitely, if you haven't had a chance to take a look at this company, definitely do more research and see if this is a company worth buying. I think it's great. In my opinion, it is a buy company. Not looking for me, however, I'm not looking for a healthcare stock right now. But if I were gonna look for a healthcare stock, this would be one stock that I would look for. Another one would be UNH. All right, guys, thank you so much. Thank you so much for watching. Hope you like this video. If you do me a favor and hit that like button. If you're not yet a subscriber, do me a favor and subscribe. Hit that notification bell. Thank you so much, guys. Stay cool, keep investing, and I'll catch you guys in the next video. All right, take care. Aloha.